welcome to Business Today. I'm Siddharth Zarabi and you're watching our continuing coverage on Budget 2026-27, and joining me now to help us understand the fine print, Naina Lal Kidwai, Chair of ISC and Past President of FICCI, Anshuman Magazine, the Chairman and CEO of India, South Asia, Middle East and Africa at CBRE, and Nilaya Varma, Group CEO and founder of Primus Partners. Thank you very much all for joining us. Clearly, this budget has a lot of fine print, and as we have seen, the devil always lies in the fine print. Predictable budget, some people called it boring, but I think when it comes to the things that are required both for our domestic economy and also to take note of the external factors, this budget ticks all the boxes. I want to begin with you, Ms. Kidwai, on your understanding of what do you think perhaps were the most significant announcements in this budget. Naina Lal Kidwai.
I think one of the best things in this budget is the consistency it has shown in terms of the way the government has stayed the track on the fiscal glide path. So the commitment therein, which is really just a 0.1% improvement from where we expect to end in March at 4.4 and the commitment to go to 4.3. So it doesn't starve the economy of funds, but on the other hand, clearly indicates that the commitment to the fiscal glide path stays. Infrastructure spending going up. I think many of us fear that there may not be enough leeway for that, but it's not just being reduced as we feared, but actually gone up. And within infrastructure spend, for some of the areas I work in, water and sanitation, it's great to see the commitment, for example, continuing to the Jal Jeevan Mission, which rose by 198%, and the government's commitment to take rural water, tap water to every household remains with 100% coverage by 2028. And equally, the funding that goes into river water-based management, groundwater, hydrology, these very important areas for provision of water and safe water to citizens remains on top of that infrastructure spend program. I also think that one of the concerns that has typically come and government continues to raise is the lack of private sector capital expenditure. Yeah. And the main reason this happens is because if capacity utilization is down in the 70% sort of mark, you will not see capital expenditure. Typically, the sweet spot is around 85%, where once utilizations are up, companies feel fit to begin to plan for that next expansion. And this can only happen with demand. So as demand goes up, this will go up. And I think here there has been focus on the demand creation. We saw this outside the budget before with the GST reprieve that came in. But now also the big focus on job creation. Because with job creation, you get people earning money. They earn money, they spend money. That puts demand up. Demand leads to capex, and that whole virtual cycle which we're seeking comes to pass. So the job creation aspects of this budget are quite significant to my mind. Big push in healthcare, medical tourism, tourism itself, which is a big job provider. So many of these high labor-intensive sectors figure, as also does the push, for example, in data centers. Very forward-looking in terms of the tax holiday there. And these new large investments, whether in data centers or GCCs, which are these global excellence centers that we've got now, close to 2,000 of these in the country, are big employers. So a push for these large projects which employ people becomes very critical to give the demand that we are also seeking in the economy for consumption to go up.
Fair point. Elaborate explanation. Nilay, I want to come to you, and this is to do with one of the most far-reaching proposals, and this is the tax holiday. We've never heard of a 21-year tax holiday, although there were earlier schemes many years back which had sunset clauses, including the one that boosted the IT space many years ago. But When I was speaking to INB Minister, uh, Electronics Minister Ashwini Vaishnav, he spoke about the fact that this would lead to three times the investment that we have already seen on data centers and associated proposals to almost 200 billion. Is that a assessment that you also share in terms of the impact of this pronouncement on future investment?
Yeah, Siddharth, thank you. I won't like to comment on whether it's going to be 200 billion or not. But I do agree with the minister's assessment. The fact that many operators are looking at India for setting up data centers. I can tell you in the last 2 months, I've been in UAE, Singapore, and the US, and I see almost 10 to 12 gigawatt of capacity coming in 2 or 3 states in India. And this obviously includes the Google big 1 gigawatt announcement. And this tax break really helps to make that happen. Again, I would not be surprised, Siddharth, when we have the India AI Summit later in the month, that we could be looking at $50 to $60 billion of investment being announced at that platform. So yes, I think from a trajectory perspective, I completely agree with the minister's assessment. Whether it's going to be 50 billion, 100 billion, or 200 billion, I guess time will tell. But the bigger point to me, besides the investments that come into the country, is India becomes the core to the critical infrastructure driving the world economy. Because these data centers, AI data centers, are not just servicing India's need, but global models and global clients. And to that extent, while India becomes a critical infrastructure for the world economy.
Absolutely, Nilay, and this is a good point that you make about future possible announcements, particularly at that massive AI summit that is going to take place in a couple of weeks from now. Anshuman, I'm coming to you. You understand urban India, the urban scape very, very well. One of the proposals is city economic regions and related municipal bonds. Again, in some ways, this has been known and spoken about, and efforts have been made in different sizes and shapes in the past. Are you convinced about whether this is going to take off? And if so, what would its realistic impact be?
First, no, great. In fact, one of the stats I always share is that, if you look at Indian cities, if China has 115 cities, we would have comparable maybe 30, 40 cities, right? And we really, earlier, you would recall there was a 100 Smart City program, which was a great announcement. And then, of course, a lot of funds went into many cities. And of course, it has been seen what the outcome was finally. But still, the fact is that there was some large amount of improvement in many cities. Now, one of the things you talked about municipal bonds, like you rightly said, this was talked about before. We really need to expand that because we have to improve ways of financing our infrastructure, be it city infrastructure or urban infrastructure. So the budget has announced it. I hope it encourages more states and the cities to really go to the next level as far as the bond market is concerned, because, or even the municipal bonds, there are certain cities already doing them, and there will be, what do you call it, and I hope that spreads. Another one area besides, talking about the finance minister also talked about tier 2, tier 3 cities, which is great because we really need to capture and improve the infrastructure in the cities. But one needle mover I've found in this budget, which is not being talked about quite a bit, is REIT and InvITs for CPSE, which is central government assets. And if that, which really means they want to monetize assets with the government, starting with the central government, and not only monetize but also change the non-performing assets, so hopefully performing and optimizing it. Now, if this structure works, this is going to unleash a huge amount of financing and funding in the system. Imagine Government of India is the largest owner of land, real estate in a way in the country. And if a model of a REIT and InvIT can, unlock the value of that, it will make a big difference. So I thought this was a major announcement, which hasn't got enough enough attention. And very quickly, you mentioned data centers. I think that again is a needle mover. However, with data centers, I have no doubt the capacity of data centers will increase, but we still need to address the power issue. Data centers need a lot of power, water, and hopefully with some of the power reforms, we will be able to meet that. So we can get the funding, but we still need to get a large amount of power the data centers require. And last two things were special economic zones, which being allowed that they can work in domestic tariff areas. A lot of special economic zones which are struggling, and this will give them impetus.
Oh, this is a very good point that you particularly make on power. I was just speaking with a former finance secretary on an earlier show, and he said that given all of this, one of the things that needs to be done is to ensure that power is evacuated from our solar power stations and connected to the grid, because that will improve availability and also cause more viability. Ms. Kidwai, I'm coming back to you, and this is in terms of the impact on foreign investment. There's been a bit of a wait for FDI to come in, more money basically. Do you think there is now a scenario that India looks to be comparatively a better investment destination, a stable macro, policy certainty, the Goldilocks phase that is being spoken about, and therefore do you think we can expect more foreign investment from here on?
I think a lot of this will depend on how our ease of business continues to improve. So in itself, the sunrise sectors are as much about getting domestic industry aligned with the direction the government is wanting for industrial growth. And there are sunrise in that biopharma is a very exciting sector. It is the direction for our robust pharmaceutical industry to look at. And we have one of the most successful pharmaceutical industries anywhere, largely export oriented. So to give that incentive for us to move the way China, for example, has into the biopharma space is a very interesting push, encouraging R&D within that. Semiconductors, for example, again, we are already seeing interest from offshore. So it'll be good to see how FDI comes in, given your question. But equally, we have had huge commitments coming from Indian industry, the Tata Group, etc., that have promised to enter these sectors. So the sunrise sectors are more, I think, about government incentivizing, but also directionally guiding industry as a whole, both Indian and foreign, in the directions which we believe are important. They're important to us for national security as well. Semiconductors is a state point, rare earth minerals is another. These which we require to be somewhat more self-reliant and not so import-intensive as we have been. And others are also pointing industry in the direction of where growth might lie, both for the domestic market, but also for export.
Nilay, I want to come back to you, and you spend time on the ground in Davos, meeting perhaps dozens of people who have an interest in India, existing as well as potential investors. I'm asking you a broader question beyond just the budget numbers. In terms of the investment outlook towards India, how would you categorize it? And there must be a long list of expectations. How much does the budget fulfill it? And more importantly, what more do you think is required in the future, both from the states and the center?
Yeah. So I'll try and answer this, Siddharth, in a couple of ways. I think when we talk about India as an investment destination, we need to rephrase the question as states, because states are where the money comes in. And I think to that extent, many other states are doing very, very well. I think the broader challenge for India would be what happens if all the investment is concentrated on 7 or 8 states and not rest of the country. That's a different problem that we do need to solve. But overall, I think India is looked as a stabilizing force, given all the geopolitical uncertainty. Clearly, ease of doing business has to improve further. I think government has shown intent. Investors would like to see many more actions, and this year's budget actually helps them and gives them a clear direction. I also wanted to pick up a couple of more points, Siddharth. One on the aspect of power. Unlike, let's say, US and many other places, India has one grid. And I know for a fact states like UP, Andhra Pradesh, or Maharashtra, where significant investments in data centers coming, they've actually planned massive evacuation programs when it comes to power. I mean, one of the states just announced a 1600 megawatt RE pump storage project. So I do believe states are very cognizant of the energy requirement to make these data centers work. One other point I would like to bring in, and I think it was mentioned briefly, I think this budget has been about jobs, jobs, and more jobs. Hasn't been sold in that way. And I say this because all our research has said that India has a problem in creating jobs which pay about 30,000 rupees to 1 lakh a month. We have lots of jobs less than that or more than that. And if you look at many of the announcements, whether it's the care economy, how many more jobs can be created there in the tourism sectors or even corporate mitras, these are opportunities for graduates in the country to be skilled and to be able to provide well-paying jobs. And that will also address eventually the consumption cycle, but more importantly, focuses on the supply side, which very often budgets tends to overlook.
Oh, that's a very good point, especially on jobs. And Nila, you are quite correct, because it's also about some of the distortions in our market. In the government, at the entry level, the government pays far more than what the private sector does for entry level jobs. But at the top end, the government pays far lower than what the private sector pays. And that distortion, you spoke about 30,000 to 1 lakh. I couldn't agree with you more. I think that's a real pain point. We'll see what the age of AI does to that. Anshuman, I'm coming to you for the last question on the show. There is another announcement, and this is the high-speed rail corridors. Again, work that started. In fact, one project is still underway, although it has had cost overruns and time overruns. But that is perhaps to be expected on account of some of the politics also that played out. But when you look at it from your experience with this sector, high-speed rail, freight corridors, container shipping, and capacity building, in terms of the overall infrastructure push, added to that once again a record number on capital expenditure, 12.2 lakh crore, of which a very significant sum will go into all of these projects. What does this mean for the ultimate infrastructure play for India?
It means a lot. So one end, of course, is obvious that if you have the freight corridors, the FM talked about waterways, and the entire connectivity helps the supply chain. And people manufacturing goods now, they can, even in remote areas, they can take it to other places, job creation, everything. But one major, area of impact, which I guess is not talked about, is land. I think earlier someone mentioned that land is expensive in India, and that is also a deterrent for doing development. It could be for office, residential, or it could be for social infrastructure, healthcare, or hospitality, or whatever, or manufacturing. So once all these infrastructure investments, be it highways, connectivity, it releases more land for development, to put it simply. Which means, like I mentioned, one big complaint is that when they come in, because our infrastructure is limited in some of the cities, the investors or people who are putting manufacturing or doing whatever, they can't go too far from a hub. But all this will encourage more investment, more land will come out at a competitive cost, and that it itself has a whole spiral impact on job creation and consumption.
Absolutely. Viewers, we've been having a host of conversations with multiple people who understand different aspects of the economy. I think the long view really in the budget and outside is that we are in a very good spot. Of course, things could have been much better, but remember, things could have been much more worse. But we must thank both our industry as well as our policy making establishment for having kept things on an even keel. And we are now, right now, talking about what the government of India has done. We could do another show on the reforms that the RBI and the SEBI have done and proposed to do, and the promise of many more reforms from the fiscal and administrative side in the near future. And that is why I think aspiration and aspirational growth will continue to propel us forward. Naina Lal Kidwai, Nilaya Varma, and Anshuman Magazine, thank you very much for your time with us today on this show. Viewers, with that, we wrap this up here. I'll see you again. Until then, goodbye.
Finance Minister Nirmala Sitharaman has unveiled the latest Bahi Khata for 2026 with the vision for Viksit Bharat 2047.